Hey, there's that time of the month where if you follow us at Five Market Realty, we put out market updates about what we see in the local market around the Athens area, and of course, the national trends at another time in the month. And typically, we do talk a lot about the national trends. That would be what this update is about. If you're interested in the Athens area real estate market, have questions, just want to stay up to date on what homes are coming for sale or information on what we see, be sure to click subscribe. But we're going to get started now. It is 6 o'clock in the office for me on Thursday. St. Patrick's Day is tomorrow. Got a little bit of green on. And so happy St. Patrick's Day to you if you're watching. Maybe you're seeing this later in the month of March. On this market update, we usually use a resource called Keeping Current Matters to kind of help us give you information on more national trends. Their information came out to us last Friday. And at the same time, we saw some big news as a bank in California actually failed due to the rise in interest rates and how they were positioned. So it just felt like at that time, some of this information was already out of date while some of it was still very pertinent. So it took another week. And as we saw interest rates react to the bank failure, we felt like, this would be a better time to get out a market update to you. So what we're going to talk about is what we see, what we know, and what we don't, because the market is very volatile in a lot of ways, not just real estate world, but in a lot of ways. So if you remember from our last market update, let me move my head here. We talked about a stronger buyer demand as we went into February. And that was true. Look back here. We're talking about good buyer demand at the beginning of the year. And the last time we talked to you about this market update, we were actually in February, and it was starting to look as if the buyer demand had increased. And that was true. But then after some inflation news and over the month of February, rates started to go up again. And then look at when we started the month of March, right there, we were in weak buyer demand. And I can tell you, felt like we were starting to see that pivot. Then, of course, just Monday of this last week, we saw interest rates take a dip. And now we're seeing some buyers actually benefit from that. So that's something to point out, is how quickly things tend to change in this current market instead of being steady. That's a big story of what we're seeing, is the quick changes in the market. Mortgage rates remain the biggest story, as you know. This is talking about March 2nd. They were up a little over 6.5%. And now I'm sitting here on March 16th, and I know of people that have been getting 5.5%. Very different than what you see right there. You can see this sharp increase in rates. We've talked about that many times. That's the story of what's going on, is not that the rates are ultimately so high, it's how quickly they've risen. The 10-year Treasury yield and the mortgage rate, 30-year mortgage rate and the 10-year Treasury yield, we've talked to you several times about how they coincide. This blue line shows the 10-year Treasury rate. Let's look over here. That's the blue, 4.2, a little over 4. Now, this is over here on March 2nd. This is where we're talking about how the news changed so quickly. Right now, we were over 4 on March 2nd. It dropped by March 15th all the way down to 3.5, 3.6 roughly. Then look at the mortgage rates and how they also coincide with it. But like I said, news is happening fast in the current economy. So if you're in the market, you need to be paying attention, because a week's notice can make a big change in your interest rate. And if you feel good about one, you might want to go ahead and lock that in. This arrow just demonstrates how quickly we saw that rise in rates and the 10-year Treasury over the month of February. So as I talked about before, we entered the month with this really strong buyer demand, and we left the month with it feeling weak. And then it's kind of changing again already as we enter the spring market. So it's not consistent. It's ebb and flowing. And that's one of the frustrations for people in the market. For over the last 50 years, we talked about this before, the normal spread between the blue line being the 10-year Treasury yield and that green line being the 30-year fixed mortgage has been an average of 1.72. This is dating back to 1972. This is what's different right now, as we discussed. We get my head out of the way yet again. 30-year mortgage rate and the 10-year, the average spread right now, this is going back to January of this year to the beginning of March. 2.7 to almost 3%. So what we're seeing there is a much bigger spread between where the mortgage rate is. This is all about inflation. Now, as we do know, we had some news where one bank had a failure in our country. There was another, I believe, in Europe, where kind of a reaction to the quick rise in rates started to make a bank have a problem. Now, not going to get into all the details of how that might happen. I'm not an expert to explain it. But what it does show you is that this quick rise in interest rates that the Fed has done is having ripple effects outside of just people buying a house. So we might see something change with that. That's why you want to pay attention, because, frankly, there's things that we know that we see in our market, but we don't have control over what the Fed Reserve is doing with interest rates and other global impacts of the economy right now. So let's take a look at some other things. The total listing count, that's one of the things to keep in mind that's been a driver of these prices and what we're dealing with. The total listing count is still way down. That's one of our problems. Even though we have inventory coming back to market, this red line represents March of 2020. And as you can see, this is pre-pandemic, and we're still significantly below where we really would like to be. There's a narrative out there that things are sitting, and yes, some homes are sitting because they're probably overpriced. The ones that aren't in certain price ranges are not. We still have buyers out there, and if you're on the market, you really need to evaluate what is your price point. Looking here, the numbers of homes for sale is increasing, but it's still almost 50% below than it was pre-pandemic. Let's just look here. Right now, 2023, nationwide from Realtor.com, this is what this is talking about. This is better than 2022, better than 2021, but still so far below the previous years. And one of the reasons we're seeing that, as we know, is a lot of people just aren't motivated to sell because they cannot replace what they have. Now, this is the housing market short millions of homes. This is basically talking about Realtor.com, Bank of America. This is Lance Lambert of Forbes. That Realtor.com feels that we're 5 million short, Bank of America 4 million, Freddie Mac almost 4, Morgan Stanley 2 million. So there still seems to be a supply problem that we're dealing with. This is national news, and I want to show you something else as we're going to get a little bit more local. This is where I'm going to end our market update. Basically, what people are kind of thinking right now is, should I buy a home? Should I sell my house? Should I sit this out? What's happening in the market? The interest rates are really high. That's what I'm told. Is the market going to crash? That's what I'm told. Well, the truth is, depending on buying or selling, it depends on you and what your needs are. I want to talk about what we're seeing the last several years for home sale prices in Clark and Oconee County. I'm starting here in 2018. These are home sales over $750,000 to 2020. You can already get a feeling from the graph what the trend is. Way up over the last 5 years. 1% of the sales in 2018 in Clark County were over $750,000. Now it's 4%. We're going to see a much more significant gain as we go to the next slide. This is Oconee County. Home sales over $750,000. 2018, let's see what it was. Only 3% in 2018. Go again. 21% of the home sales in Oconee County, our neighboring county, were over $750,000. That is a drastic increase. If you're a seller, what you have to understand, or if you're thinking about selling, is we're not going to see that again. It's impossible to see this type of drastic increase. Now, the percentage of overall home sales are lower, so that does make the smaller amount of sales represent more. But there's another trend that's happening, because while home sellers might look at this as a positive, let's go to another slide. Let's look at Clark County since 2018. This is home sales under $350,000. Home sales under $350,000. Let's see, get a little numbers here. Obviously, the trend is downward. 2018, it was 91%. 91% of the home sales in Clark County were under $350,000. Keep in mind, Clark has a ton of condos. Clark has a lot of things like that do sell. So not all of these are your traditional single-family homes. But in 2022, with a bunch of these still being condos and investment properties, 63%, that's almost a 30% decline. That's the trend that we're seeing as well. That's not good. Let's go to Oconee County, 2018. You're sitting here looking at almost the same trend. 51% of the home sales in 2018 were below $350,000. Affordability was a different thing. Interest rates were still relatively low. And then we're at 14% now. That's the number that's there. So what I'm mentioning to you, should I buy a house? Well, if you have to move or you have to, then yes. Waiting around or trying to time the market's not a big thing. But also think about the fact of where you're buying. If you're a home buyer below $500,000, achieving that and where you are is currently very hard. So that might be a good thing to be doing. If you're a home seller that has a tremendous amount of equity and a good place to move, that's probably a thing you should be considering regardless of interest rates. Now, lastly, I am going to end just like I always do. This is our group here at Info at 5M Realty. And one thing I do want to say to everybody is happy birthday to us. You're watching this hopefully on St. Patrick's Day. That's really when we moved into our office and got our company going in 2015. So St. Patrick's Day is sort of a birthday for us. That's 7 full years in business, beginning year 8, turning 8 years old. So we started not long ago, less than 10 years as a company, but several people in this picture started about 20 years ago, and some not quite as long. Myself in 2004, Daniel in 2000, I believe 2001, 2000, and of course